and let's get started. First off, I'd like to put the disclaimer, the following webinar is purely educational. Any stocks or futures or anything else that's mentioned does not constitute advice or should not be construed as a recommendation. So this webinar today is purely for educational purposes only. If you've not received my free ebook, please go to my website, powercycletrading.com, and just put in your name and email address there, and you'll get this free ebook. It's Top 15 Option Strategies. 1 second, I can put the actually put the link in there for you if you just bear with me 1 minute. Let me pull it up. Okay. So yeah, just here's the link to it. If you'd like to get that ebook, just click on that link and it's there all for you. So I'm also going to have a special. I'm going to go through this at the very end, but in case you have to take off a little early, it's a trader special. You get a choice of any of my Power Cycle trading courses. Each course is $597. I'll go through more detail on that as we get through the presentation. You'll also get Option Trading Made Simple. It's a $150 course. And you'll get Daily Aftermarket Power Outlook, a 1-month membership to that, which is $99, and 1 month in our virtual trading room, which is $147. So you'll get all this, total retail price of $993, and you'll get it for $597, just the value of the course. So if you're interested in that, you'll just need to go to powercycletrading.com/trading. I'll put that up real quick. And you can read all the details. It's all the details are also on my website and also on this link here. So take advantage of that if you'd like. So I'm going to go over here today 5 essential Power Cycle trading tools. How to let winning trades come to you, how to capitalize on powerful trend breakouts, my favorite trading tools, futures, weekly options, and why, how to get significantly higher returns using less capital, and a secret trading weapon that I've been using for years that really helps me each and every day. So who is Power Cycle Trading? I've been trading and brokering commodities and financial markets for over 30 years. I began trading futures in the early 1980s, and over 20 years ago I started trading at that point in time newly created option contracts on cargoes of crude oil, and I traded millions of barrels of these crude oil options. For over 10 years I managed the International Oil Trading and Marketing Group for a company called Transworld Oil in Bermuda, and at the time it was one of the largest oil trading companies in the world. My group traded billions of dollars worth of oil, foreign exchange, financial market derivatives, and it was not uncommon for us to be, trading over day. During my 30 years of professional trading, I learned a lot of different techniques that were not commonly known or used by individual traders, and this led me to develop a simpler yet highly accurate price cycle trading system that individual traders can easily learn and use to level the playing field with the Wall Street professionals. So the Power Cycle trading model, this gives traders or investors the ability to recognize and capitalize on the beginning of a trend rather than getting in at the end. I founded Options on the Open virtual trading room. This is where the individuals can improve their trading skills in our live trading environment, much like what I had when I was running a professional trading group. We had a trading room with a desk with all of the traders, and so it was a great place to communicate, exchange trading ideas, and have great communications between traders, and ideas could be exchanged. So after several of the members had asked me to teach them how to trade futures, we grew into more a comprehensive trading service. Hence, we launched Power Cycle Trading earlier this year. So let's get started on this journey to becoming a successful trader. So first, I'm going to go into how to capitalize on powerful trend breakouts. And this is a great component that you can, once you learn the proper way to do this, which I'm going to go through in great detail, you can use this tomorrow for your trading, regardless of what kind of trading strategies you use or methodology. This will really help you define breakouts. And there's a specific way that you want to do this. So I'm going to go through a lot of examples to show you. And we incorporate this with our trading system. So we, and I'll talk a little bit more about that as well. So we'll incorporate moving averages and trend lines for our breakout trades and also for our trade management. Trend line breakouts. It's a simple strategy when used correctly. Trend lines, basically supply and demand dictate price movement in the use of trend lines. And trend lines are universally used, but construction of them can be easily dissimilar from one person to the next, causing for a very subjective interpretation. The difficulty when creating these lines involves the specific points to select and connect. Human nature often interferes in the proper construction of these lines. You know, we're accustomed to review the historical price activity of a market from its past to present, with dates reading from left to right on the chart. And as a result, the demand and supply lines of a trend line are drawn extended from left side of chart to the right. Now, intuitively, this is incorrect because recent price activity is more significant than historic price movement. So precision and accuracy demand that the lines be extended from right to left with the most recent date appearing at the right side of the chart. So I'll go through a lot of examples here to lay this out to you and show you how you can incorporate it with your trading. So a supply trend line is declining price movement as defined as by a downsloping line. As well as both of the lower price and prices being lower for the highs and the lows. And the supply pivot point is when there is a price that is not exceeded by the prior price or the price immediately after. And this is what we call a pivot high. Now, when you're drawing your trend lines, we have one of our, we use several different trading platforms. I mean, our model will work across any platform. And we've come up with a really good automatic drawing tool for Thinkorswim that is one of the platforms we use. So we'll automatically draw these trend lines. And basically the way that we do it is you want to first find your pivot, your first pivot high. So you're going to go from your right side of your chart in. Let me get a drawing tool and I can highlight this. So you want to come most current price. So right side of your chart in, and not from the left side, okay? So first go up and find that first pivot high. So here's the pivot point. See, it's right here. This point is higher than the point before and higher than the point after. Then go find the next pivot point right here. It's higher than the one before, higher than the one after. Now we have it coded so we can automatically draw this and have these lines come up, and we can take advantage of them within our trading model. So here's your pivot high 1, pivot high 2. Then just extend the line down, and then you've got a perfect trend line. And you can do this mechanically each and every time the same way. So rather than, you know, coming up from past price here and maybe, you know, drawing over to this line and connecting that line, you can have, you know, lines all over the place. So if you do it this way, this precision each and every time, it becomes systematic and mechanical. And so then this is works on any time frame, and these arrows right here are just to show you where our system actually had a long entry. And what we'll do, we'll incorporate the system. When I see a trend line and the system has a long or something like this, you know, it's usually a great trade setup and one that you really want to be active and take advantage of. So this was actually on an Apple 5-minute chart, and this is your descending supply line. So that's one example. Okay, let me turn off this drawing tool. Okay, so here's the next example. Here's gold futures, same thing. This is on a daily time frame, and you can see here's your pivot high, your first, coming from right to left all the way out to past pricing. So here's a pivot high, so it's higher than the point before and higher than the bar after. And here's your next pivot high, higher than the point before and after. And here's another one up here. So extend it up, extend the line down, perfectly drawn trend line each and every time. And again, here I just put this in to show you where our model actually went long on our cycle model, so right before the trend break. So if I see my cycle model give me a long entry and I've got a trend line, I really want to be aggressive on that trade. Here's another example. Here's Amazon. This is a 60-minute time frame. So same setup. This was back in September. So here's a pivot high there. Here's a pivot high. Here's a pivot high. So connect these lines, extend it down. You've got your perfectly drawn trend line. Again, we had a buy signal right here with our cycle model. Broke that trend line. Look at the expansion on that. So, you know, it's great for momentum type trades, and we're constantly using this for our intraday trades as well. Here's one more. This was Apple. This was back in October. So these were some other trades that we took. Here's a pivot high. Here's a pivot high. We use a tick charts, 400, and we use some other time frames for our trading model. Our model went long here, had a trend line there, break to the upside. So pivot high, extend your line, breakout. Now the opposite is your demand pivot point. And the demand pivot point is when there is a lower price that is lower than the prior price and the price immediately after. And this is, you know, what we call a pivot low. And here's an example of a pivot low. And this is your demand line, which is an ascending trend line. So again, we get the drawing tool. You want to start from, you know, the right side of your chart, looking for most recent price. So that would be right here, right there, pivot low 1. So here's your low. It's lower than the bar before and after. This is a 5-minute time frame, so each bar is 5 minutes of data. Go down and find your next pivot low, which is all the way down here at the bottom. So here's your pivot low 2. Connect your line up, extend it. You have the perfectly drawn demand trend line, and it'll draw the same way each and every time. Again, here's our cycle model. Gave us a short signal up here on this bar right in here. So when I saw a trend line, you know, I was very aggressive on the trade. And you know, you can see when it breaks these trend lines, it really gives you a great momentum burst. So it's a great way to enhance your trading, to really you know, focus in on breakouts, which are important to capture that, you know, momentum that you're looking for in the market. And this will work on any time frame. So that's an example there. Let's go through some more examples. So the more you see, the more easier it is to kind of grasp what we're doing. So here's another demand pivot low right here, right there. So it's lower than the bar before, lower than the bar after. Then you go down to your next price. So you first your most recent price, and then down to the left of your chart to a later, you know, data point. So here are the 2 points here. Extend your line up, trend line break, down she goes. Here's another one, pivot low, trend line break, there she goes. So this was on an Apple 400 tick chart, so intraday for day trading. Now my two favorite trading tools, you know, that we use futures and we use weekly options at Power Cycle Trading. And the model that we use works, you know, well across, you know, all the different time frames and asset classes. So it works great with futures, and it works really great with you know, the underlying stocks, and then we'll use weekly options, and I'll go through some of that here in this presentation. So you guys probably already know a lot about futures, but I thought I'd just highlight it in case, you know, you're not that familiar with futures. But the benefits of futures are that they have some great tax advantage. There's one, you know, this is a whole course in itself, the 60-40 tax rule, where you know 60% is capital gains, 40% ordinary income. So there's some really good tax advantages for using futures. They have lower margining costs, low commissions, highly liquid investment, great volume, great transparency. You know, the markets are nearly 24 hours, great for hedging, also, you know, fantastic for portfolio diversification, and lower risk than stocks because, you know, it reduces any overnight gap risk that you might have. So those are some great benefits for using futures. You know, the margin rates, that's one of the nice things about it is the leverage that you get. You know, so for example, we do a lot of NASDAQ 100, the E-mini NASDAQ, the NQ, and you know, you can get the day trade margin rates of $500. So, you know, if you make, you know, $50, you know, per contract, you know, that's a nice return on is, you know, just a little amount of capital of 500. So that's, you know, 10% return on your capital. So that makes it very attractive for using, you know, futures. And here's the E-mini. Some, you know, accounts you can get as low as $400, but the margining aspects of it is a great enhancement for it. So now I'm going to go through trading benefits of the weekly options. Weeklies are very cheap. Since expiration is within days and often hours, you can purchase at-the-money weeklies for as little as $2 to $5 to $10 per contract. Weeklies have unlimited profit potential. They can move 500, 800, 1,000% or more on a regular basis, and that's, you know, a big contrast to what a regular option contract will do. Weeklies are easily traded securities. They trade just like stocks, and the volume is very high, so liquidity is not a problem. And weeklies, since you have 52 more times to trade them, you get a lot more opportunities and to trade for, you know, low risk, non-directional and directional income strategies. So you get, you know, 40 more opportunities than you would with a monthly option. And weeklies are for everyone, not just the pros. Options, you know, have managed to get a bad reputation over the years, despite being used by practically every professional investor out there. And in this, a lot of it's because the education offered on options, a lot of it seems too complex and difficult for new traders, and they're simply overwhelmed. So I've developed a course actually in a teaching methodology that I call the practical way of trading options, and this is teaching options with the focus being on just the option delta and market timing. Market timing is, in my opinion, the single most important factor in assessing a stock's likely price movement. Traders realize the importance of market timing, but, you know, don't have what they need in order to get the information quickly and accurately. And I kid our members a lot of times that we have an almost unfair advantage because we have both a high probability timing system and knowledge of how to use weekly options, giving us a great trading advantage. So when trading or swing trading stocks, I try to always use weekly options, and this offers some exceptional trading benefits, and one of the greatest ones is leverage at an extremely low cost. I'm going to show you just a few tables. These are trades that I took in our virtual trading room, you know, over several different days, and this will show you the leverage and how this can really pump your returns. So the tables I'm going to show you are illustration of some of the exceptional returns that weeklies offer. Now these trades are unaudited and there's no guarantee of future results. And remember that one option contract represents 100 shares of stocks. So these were trades that I took and called out to our trading room. So this was on November 2nd. These are just a list of all the trades. We primarily will trade Apple weekly. Apple trades like a commodity or futures. I mean, it's so thick with liquidity, and the ranges are so, you know, it has such great trading ranges that we will stick, you know, usually with Apple weekly options, and I'll go through some more detail on why we do that. But you can see here that these are all November weekly calls and puts. So you can see here, this was here was the start of the day. Did a $5.95 puts. I bought it for $3.65, sold it for $3.90. So Remember, one contract is equivalent to 100 shares, so this is $365 for one contract sold at $390. That's $25. That $25 over the cost of $365 gave me a 6.8% return on my capital, one contract. Here's just a list of trades. Up here I bought the 595 puts, one contract, for $600, sold it for $700, made $100. That's a 16.7% return, and that's on one contract. So, if you did 10 contracts, that's $1,000. So you add all that up, you've got a cumulative, this is just for these day trades. These are day trades of $275. That's one contract. Cumulative return is over 100%, and the average per trade is, over 11. So you can't do these kind of returns anywhere else other than by using weekly options. And if you understand why to use them, then you understand, how they can really help your trading. And again, these are unaudited. These are just examples to show you. Here's another day on October 26th. These are all Apple trades again, and on that day made over 82% cumulative return, over $300 per contract. You can see here. See, this is the beauty of it. Bought the 600 calls, paid $480 for a contract, sold it for $520, made $40. 40, over your cost of capital of $480. It's 8.3% return. Here's $55 cost of capital, $405, 13%. Here was a short put spread. A short put. Sold the 600 puts at $130, bought them back at $102, so $28 real quick. So these are ways that you can use it, and just shows you, gives you an idea of the enhanced returns that you get from the extreme leverage at a low cost. Here's just another table. This was on October 18th. You can see, again, over 50% return. So when if you're making these type of returns, 50%, 100%, 80%, you can have tremendous cumulative returns over a month. Now these are mostly on the buy side, so you can define your risk. So on these particular trades, here's a $340 here. So the max you could ever lose would be $340. But we stop losses, and we have a system, so we'll never take the full loss. But that shows you that you can define your risk quite easy. And these are just the trades. This is the system showing you the trades. This was the short that was taken on that day. Here it went neutral, went long, went neutral, went short, went neutral, short again, long. And these are all on Apple. See, we use the underline, and then we will trade the weeklies instead of the underline. So here was Apple, went short. The underline would have been at $640, covered it back here at about $637.5. But instead of buying the stock, we bought the weeklies. So I'll go through some examples of that to show you the difference. So some more facts. Weeklies now account for nearly 12% of the 300 million option contracts traded every month. Weeklies are still relatively new, but it should not be overlooked, for they offer huge trading benefits. So if you know how to use them, you can really benefit and get some great results. For some of the more exciting stocks like Apple, Google, you name it, weeklies are now making up a whopping 40% of the option volume traded. They come out each Thursday, and they expire the following Friday, 8 days later. So the basics of weekly options. If you're at all familiar with options, the basic value of an option is determined by the time value times its implied volatility times its intrinsic or extrinsic. That's it, just these three principles, and that creates your value or price of your option. So by using weeklies for day trading and swing trading, we have been able to better utilize their beneficial factors of time decay, volatility, and option delta, creating a forceful kind of triple win formula that we can use. And then by adding our directional price cycle breakout system, we have created a really great probability trading methodology. Now the biggest factor or element for weekly options is time decay. And so here's a table. This shows you the time decay graph and how it accelerates to zero. So you start off, on a Thursday, you have 8 full days. So you have 100% time value in this option, and then each day it decays and devalues by 1/8, or roughly 12%. So until it's at 0 on Friday, where it's worthless. So if you know how to take advantage of this, and this is what I'll show you, then it's a great vehicle. And here's just a numerical table to show you the same thing. So on Thursday you have, I just put in these inputs. I put time value 1 on Thursday. It starts out 100%. And I just put implied volatility at 300, and then intrinsic value I made constant at 1. So you just take that time value times implied vol times intrinsic, gives you your value of your option, your premium. So on Thursday, it had a time value of total time value of 1. So you would have to pay $300 for this on Thursday. The next day, Friday, it devalued by 1/8. So that time value now in the option is only worth 88 cents. Implied volatility stayed the same, intrinsic value the same, but you can see your premium fell by down to $262. Next day it goes to 0.75, 0.63, 0.5, 0.38, down to 0. You can see here on Monday we had a 0.5. We only had 50% of the value of the time still left, and I pumped the implied volatility at 800, kept the intrinsic at 1, and you can see your premium only is at $400. Not much more than it was on Sunday. So you can see that even if your implied volatility jumps, when time decay is going against you, your value or option just depletes quickly. So the golden rule for weekly options is that you don't want to take premium overnight, because you're going to be penalized by 12% of that option value the next day. I mean, if you get a great pop and you get a great movement, then that's okay. You can offset that theta by the delta of that option changing, but that's just kind of a directional aspect of it. So here's a good example. These are two option chains, and this is Apple again. And here, this top option chain here is the weekly option chain for Apple. At the time, Apple was trading around $632, and we were, trading that 640 strike on the calls right here. So you can see over here, here's your bid and your ask. Here's your delta of the option. So this is the primary thing that we look at. And instead of trading Apple for, buying the shares, we just come over. We usually buy a 50-60 delta right here, and I explain and teach that in my service. So the bid here is $5. The offer is $505, so that's $500 at $505 to buy that 640 strike. So this is a weekly. Now if you go down below here, you take the same strike, 640 right here, come across, you can see the bid and the ask. Here's that delta, same delta. So it's the same option, but it's just that it's got more time in it, because this is the monthly. It's got about another 2 weeks in it, and so it's double the cost. Instead of buying the 640 strike for $500, you're having to pay $1,050. So that's the big difference, and you'll see some more examples here to really kind of put that in perspective. So here's just a table to lay that out as well. So Apple, again, say Apple's trading at $640 a share in the market, and to make this equivalent to one option contract, you'd have to buy 100 shares. So that costs you $64,000. So if you want to buy 100 shares, you're going to have to fork out $64,000 roughly. If you make $1 a share, that equals $100. That's less than 1%. That's 0.16%. That's your return. It's a good return, $100. That's not bad. Apple will go in movements of $1 to $3, with the blink of your eye. But if you want to try to expand on this, instead of, having to come up with $64,000, you go down and you buy the weekly options, 5 days on this particular example to expiration. You come down and you buy the 640 calls right here, and those had a 50 delta, like I showed you on that other option table. The cost of this for one contract is $500. So here's your, you make $1. Instead of buying the shares and it goes up $1, you bought the options. The shares go up, the option price goes up $1. You make $100. That's a 20% return on your capital. So you made 100. Your cost was 500. That's 20%. So you can see the difference. Now, if just theoretically, if the shares went up $100 and you'd bought the calls with the 50 delta, you would have made actually $50 because the delta is just 50% of the underlying value, how much it goes up. So if it goes up $1, if you had a 50 delta on your option, you would have made $50, but that's still a 10% return versus your 0.16. So this is using weeklies. Now below that, this is the monthlies. We showed that in the prior chart. Here's your 50 delta. You come down here, you would have had to pay for one contract $1,050. If you make $1, which is $100, you'd make 9.52% return on your capital, 100 divided by your cost of capital. And if you'd done the 50, because the delta and you made 100, that shares went up 100, you had made $50, that's 4.76% return. So you can see you doubled your return using the weeklies, and this is for directional type plays, this particular example. There are a lot of other strategies, but this is a really good one just for the day trading side. Now, here's a trade example of leverage at extreme low cost using, this is what we call an advanced directional strategy. This particular trade example I have is on Netflix, and this was back in March. And again, here's your pivot high, draw your trend line. I'm just illustrating what we're looking for. There's a whole methodology that we go through looking for these types of trade setups. You want something that's going to break out on that Friday, the expiration day, and you're looking for breakouts to take advantage of, and then you can take advantage of the weekly options which have 0 time value left, and I'll show you an illustration in this example. Here our system actually went long, so we were looking at Netflix for a possible breakout during the day. We had a trend line, it was breaking out, so this kind of leads you into the trade. And here's on a 30-minute time frame. Here's another pivot high, trend line. Our system went long on a 30-minute time frame. And so instead of buying the shares on the breakout, what we did was buy the weekly options. So on March the 16th, the Friday expiration, this is the day these expire, they go to 0. The $110 calls were going for 11 cents or $11 per contract. These 100 calls went up to a high of $174 a contract and closed right towards the close at $127. So if you just take your net gain of that $127 less the cost of $11 a contract, your net profit on this trade was $116. Your at-risk capital was $11. So you're at risk $11. You made a net profit of $116. That return is over 1,000%. So you made $116 and you only put up $11. So you can make 100, 1,000, 2,000. I've seen, these are not something that happens all the time, but this is to illustrate the point of the defined low risk and the potential for return on your capital. Even if you paid $11 and this thing went up 11 cents, that's 100% return. So it's it can be crazy. So that's a good example there. So here's the two charts to show you that exactly. So here's the Netflix again. This is a 10-minute chart here, and this is a 10-minute chart on the actual call. This is the actual chart of the $110 calls, and this is the chart of the underline. So you can see Netflix exploded here and broke out and went from $108 up to a high of like almost 112. Well, instead of buying the shares, you buy the underline, the options. See down here, they were going 11 cents right here, and they just exploded to the upside up to 170 and got out of them somewhere down here at 127 right in here. So that's a great example of, you know, what can happen if you're able to find a good breakout trade. So in summary, the dynamics of these short duration weeklies are that they offer exceptional trading benefits, such as the ability to make money with lower risk, low capital requirements, shortened time frame for trading, higher profits, higher return on capital, and weekly trading opportunities. So now I'm going to go through 5 steps to let winning trades come to you. You need to have a plan that governs all of your actions when you're trading. You need to treat your trading as a business. Be disciplined in implementing, that plan. Learn to patiently wait for the highest probability trades based on the model that you've chosen to use. Allow the trades to come to you instead of chasing trades. Create structure in your trading with set goals, rules, time frames, work hours, and risk control. So, it needs to be a business, it needs to be run like a business, and you need to have discipline like you would with any business. Now, these are all simple guidelines, but sometimes the simplest things are the most difficult to put into action. Now, if you're trading a model, rules then are clearly defined, making it easier to implement them. We use the Power Cycle trading model, and it's a rule-based system. So it's based on 4 powerful indicators that give a defined price range, price volatility, change in price cycle, change in cycle momentum. And this system is rule-based, and this provides us a set of guidelines which allows the trades to come to us. So whatever model you use, know the guidelines and rules and use them. Be disciplined with them. Now, we also use 2 to 4 different time frames for all trade setups and trigger entries. And this allows trade confirming process for our trades, and this allows for non-emotional trading. So the end result of using these 5 elements in your trading is that you make decisions based on the model you are using, not the emotions of fear and greed that often sabotage traders, leading you to overtrade or give back your profits. And here's just to show you, this is the correlation. This is why we trade so much Apple and NASDAQ futures. This is a weekly time frame. This was taken today. You can see how correlated Apple is to the NASDAQ 100, or how correlated the NASDAQ 100 is to Apple. Apple makes up about 24, close to 30% of the NASDAQ 100, so it's highly correlated. So our system works great with the underlying Apple and also with NASDAQ futures. So my secret trading weapon, I'm going to go through that real quick for you. It's what I call top-down market technical analysis. When I started trading, when I was running this trading group, we didn't have a lot of technical analysis, so we used fundamental analysis, but we used a process called top-down. We'd start from the macro picture and go all the way down to the intermediate short-term picture, so we would know what the markets are doing. We'd have layers to the market, and we could put together a business plan or trading plan based on that top-down view. So this method analyzes, or lets traders or investors analyze the market from the macro big picture all the way down to the short-term intraday day trading type of picture that you can develop a plan around. And we use first, again, we determine the macro big picture, and what we use our trading system to do this. So whatever trading methodology you use or system, this is what we do, and we start with the big picture using our cycle model. So once this new cycle trend is identified, by using our model or whatever you're using, then as an investor or trader, you can plan on how to allocate your capital. If the macro trend, for example, is occurring and it's up, you probably want to be more aggressive in buying market dips and holding for greater returns. If the macro trend is occurring and it's down, macro trend is down, then you want to be less invested with larger cash positions. You would be more defensive with your buying and more short-term in nature, with shorter profit targets and tighter stops. So you can develop that plan. Now we'll use 5 time frames for this. We use the macro market trend, and we using the monthly time frame. The long-term trend, we measure it with the weekly. The medium-term trend, we use the daily. Intermediate-term trend, hourly time frames. Short-term trend for our day trading, we use minutes and ticks. So I'm going to show you current trends where we are right now. This again is based on our model, but this can show you how it helps us, and it gives you a good picture of how our cycle model has been able to navigate this environment we're in. So here, starting off, is just the S&P 500. This is SPX cash, S&P 500. This is a weekly chart here. All of these bars are all 1 week data. These are high-low bars. So our system went short based on our cycle model, the S&P 500 cash. This was back on October the 12th. This is a weekly close, and so it's still in a downtrend, still holding short. So the long-term trend right now based on our system is down. So you can do a lot of different things. You can sell rallies. You know you don't want to be aggressive buying right now. The long-term trend's down. The last time we had the trend up was back here on June 8th. We had a long-term trend, and it lasted for about 4 months. So, if your trend is up based on our model, you buy the dips. You buy it when it pulls back. So, you develop a plan. Now we'll break it down to the next time frame. Here's the daily, and we call this the medium term. And our system was short back here on the 7th of November and just went neutral today. And so, you can see here it got in right here about 1403 on that break and covered today around 1382, somewhere around there. And here's the long it got sucked in and then came down. So, but this is completely systematic. So you can see here, you can see how it cycles. Here's a cycle low, goes neutral, goes long, goes neutral, short, neutral, long, neutral, long, neutral, short, neutral, short. So, that's the model. And then you can break it down further. We go to the intermediate term time frame, measured by a 60-minute time frame. And, we had a nice short here back on the 7th of November, and that came in about 1410. Rode it all the way down to about 1384, so nice move down. Then the market's been pretty choppy and sideways. Volatility's kind of come in here the last few days. Here's a look at NASDAQ 100. Had a great setup here. I mean, it really had a great setup. Well, all these have been good setups. So this came back on, went short on October the 5th, still holding short here into today on a long-term basis, NASDAQ 100. So that got in at 2,800. Right now you're down to 2,576. So, if you have a system and you look at it from a macro, long-term, intermediate down, then you can plan your trades. Here's the NASDAQ on the daily. We call this medium term. Had a nice short setup back on the, again, the 7th of November, and covered yesterday, went neutral, and today is up and down. Today, actually the NASDAQ on our system was going short right into the close on the intermediate term time frame. Here's Apple on the, again, the long-term trend is down. It nailed it right here on Apple at about that was the 5th of October. Still holding on the long-term trend is still down. You're coming in here to 528.66 is this pivot low, and you're just kind of chopping sideways right now for the last few days. Here's the daily, which is the medium-term trend. The last short, we had a short entry here. That was on this, again, on the, let's see, that was on October the 25th right here, and it's been just trending down in this channel, and it went neutral actually today, so about 547. So from, $615 to 547, not too bad. So neutral right now is starting to get choppy, and you're down on some big support, so we'll see what happens tomorrow. So, that's pretty much wraps it up. What I like to do now, though, we trade with our system. We can trade, all the different futures. We've, got several members that like to trade gold, and here's the, here's just one of our guys, Will's a great gold trader using the system. He made 160 long on gold on one contract. He trades a lot of contracts too. And this is the trading room. It said held that forever, and then he made $70 short. And here's Doug, another member, said, Will, you can just go ahead and give me, I'll let you have my money. You can trade it for me. So, we have nice interaction between members, and here Will made another gold trade. He bought right before a news event or the market was breaking out. He made $400 a contract long. So, and they're using the same system, the same system. And here's, one of our other members from Atlanta. He had just started trading, and he had a great day with Google. He made on Google options. He made $100, $30, and $20 trading the weeklies, and he did that all in 10 minutes. So that was in our trading room. So that was Doug from Atlanta. And then we had John in Nevada. He's an older guy, a really astute, studious type person, and he's been studying. He loves the methodology and the trading system. He had a great testimonial to me, and he said it is, so universally applicable across instruments. I could not be more satisfied. And then he also came back and wrote me another one, said I want to restate how pleased I am with the basket of indicators you have developed. And he's trading the ES, and he trades on Globex after hours a lot of times. So if you'd like to get an edge in your trading and learn what these guys learn, if you'd like to take advantage of this trader special, I hope you will. And you can get what your choice. I've got 3 different courses. They're all based on the same trading model, and it's $597. That's all you pay. Then you get Option Trading Made Simple, which will teach you how to trade the delta of the option for your option strikes. Very easy. You'll get 1 free month to the Aftermarket Outlook. I put that out daily, which is an outlook on the market using our system and telling you what the market may be looking towards tomorrow. And then you get a month free in our virtual trading room. So you get all this. Retail price $9.93. Actually, it's more than this because on my site I didn't even change it. The courses are $7.97, so it's a bigger value than $9.93. So my mistake. But anyway, you're getting all this for $5.97. So if you're interested again in that, just go to powercycletrading.com, and here's the URL. And it'll tell you all about the course special, everything that you get, and you can buy it there, take advantage of that. Now, with these courses, there are 3 different courses. There's PowerCycle Futures Day Trading course. This is geared more towards futures. It's a 137-page manual, 13 videos. And then there's the PowerCycle Day Trading course. This is more geared towards stocks, ETFs, for using for options as well. It's a 109-page course manual, 20 videos. The PowerCycle Trading, this is for swing trading. It's more long-term. Trades that last a day or longer, 64-page manual with 17 videos. And then you get Option Trading Made Simple. That's teaches you how to select your strike prices. 1 month to the interactive trading room and the daily market outlook. And that's a daily video newsletter that I put out Monday through Friday. So it's all available to you. Just go to that URL, and it's a great deal. I hope you'll come join us at Option and learn how to trade options and futures. We don't trade just options. We do trade a lot of futures, and get a better trading edge. If you have any questions, just email me at support@powercycletrading.com and support@powercycletrading.com. So that's it. powercycletrading.com/trading, and check out the special. And thanks again for being here today, and I hope you guys will be able to take some of this tomorrow and help you trade and make some better profits. Thanks again.